Hello, my name is Maz. Today, I want to share a fascinating truth about one of the wealthiest people on the planet. He didn't get rich by inventing the next viral app, launching a cryptocurrency, or day trading across 6 glowing monitors. Instead, he built his empire through reading, waiting, buying incredibly boring businesses, and doing practically nothing for decades. We're talking about Warren Buffett, the Oracle of Omaha. But this isn't just a biography of a billionaire. It's a blueprint for how true wealth is constructed. By the end of this story, you'll see that his ultimate secret wasn't superhuman intelligence or perfect market timing. It was pure patience. The wildest part? Anyone can copy his principle, but very few have the discipline to actually follow through. Buffett's fascination with money started young, back in 1930s Omaha. He wasn't after flashy things like luxury cars. He was obsessed with the actual mechanics of cash flow. Even as a kid, he was hustling, selling chewing gum, delivering newspapers, and even buying pinball machines with a friend to place in local barbershops. While other kids daydreamed about toys, he was learning how a dollar could be put to work to create more dollars. He didn't wait until he was wealthy to think like an investor. However, his real education started with his first stock purchase, City Service. When the price dropped, he panicked. Once it recovered slightly, he sold it for a modest profit, feeling relieved. But then he watched from the sidelines as the stock skyrocketed without him. That single moment cemented his most valuable rule. Real money isn't made by constantly trading, it is made by buying something truly valuable and holding on to it. The stock market, as he learned, is simply designed to transfer wealth from the impatient to the patient. As he grew older, Buffett refined his approach by studying under Benjamin Graham, who taught him to stop treating stocks like lottery tickets. If you were buying a local shop in your neighborhood, you'd check its debts, its customer loyalty, and its profit margins. Graham taught him to ask the exact same questions of publicly traded companies, always looking for assets priced below their actual worth. But Buffett wasn't immune to mistakes. In the 1960s, he bought a struggling textile company simply because it was cheap. That company was Berkshire Hathaway. He eventually realized that a weak business at a bargain price is still a weak business that can tie up your capital for years. This harsh lesson led to a massive shift in his strategy, aided by his longtime partner, Charlie Munger. Munger convinced him to stop buying mediocre businesses at bargain prices and start buying exceptional businesses at fair prices. They started looking for companies with undeniable staying power, brands like Coca-Cola, American Express, and later Apple. They weren't guessing what would happen next week. They were asking if these companies would still dominate in 30 years. They stopped playing the short game and started playing the forever game. What really turned Berkshire Hathaway into a financial juggernaut was a clever mechanism involving insurance. Insurance companies collect premiums up front and pay out claims much later. The money sitting in the middle, known as float, became Buffett's investment fuel. He used this massive pool of capital to buy more businesses and stocks, meticulously reinvesting the profits. Year after decade, this compounding machine grew. The snowball effect took over. Buffett didn't become fabulously wealthy overnight. In fact, the vast majority of his wealth came much later in his life. He often compares building wealth to rolling a snowball down a very long hill. The secret is simply to start early, keep pushing, and make sure the hill is long enough. So, how do we apply this without having billions of dollars? As I always say, you might not be able to buy an entire corporation, but you can absolutely adopt the mindset. You can choose to live below your means, invest consistently, and shut out the emotional noise of the market. Avoid the temptation of quick, hype-driven money. Real wealth is built through consistent behavior, not excitement or trying to outsmart everyone else. The average person chases action and secret opportunities, while Buffett simply bought obvious businesses and held them for a lifetime. It is an uncomfortable truth because the path is boring, but that boring path is undeniably powerful. Let time do the heavy lifting and stop hunting for an overnight miracle. I'm Moz, and I hope this changes how you view your financial journey, helping you build wealth not just for the next week, but for the next decade.